Hey, what's up, America? I'm sitting up here with my lovely granddaughter. This is Deja.
Hi, y'all.
And we was having a conversation about old TV shows that we was watching. And one of my favorite TV shows when I was a kid was Good Times. Now, I used to always run to the TV when I heard the theme song. Y'all remember the theme song? Let me play it for you real quick. Anytime you made a payment,
Good time.
anytime you feel free,
Good time.
anytime you lock them under, not getting hassled, not getting hustled, keeping your head above water, making a way when you can, temporary layoff,
Good time.
easy credit rip-off,
Good time.
scratching and surviving. Ain't we lucky we got 'em? Good time. Okay.
All right.
I just had to do that. Man, I miss them old shows.
I bet you do.
But it's seriously though. Americans are struggling financially. Deja, can you tell me something about it?
Well, America is the wealthiest country in the world, and it accounts for over 25% of the world's wealth. But only a small percentage of the people have the wealth. 60% of the people have less than $1,000 in savings,
That's a shame.
and 80% of Americans feel they are falling behind financially.
Now, I wonder why people are falling down financially. Well, I'm here at the My Econ Business Center here in Hinesville, Georgia, and I have my granddaughter here, Deja, and we're going to tell you why America is falling behind financially, and then we're going to tell you how to overcome that. See, there's two objectives that everyone must meet. So before we continue on, hey, get a pen and paper because you need to take notes on this. And they say note takers are money makers, right?
Right.
Okay, so again, there's two objectives in America that everyone must meet. So if you're taking notes, I want you to write down the number 2, and next to the number 2, I want you to write down objectives. Okay? Now, the two objectives is we must maintain our current lifestyle. Now, Deja, how do we maintain that current lifestyle?
In order to maintain a current lifestyle, it has to be paid for by labor.
Labor. Okay, so this is the reason why we get up and go to work every day, is to make sure that we can keep a roof over our head, keep food on the table, put clothes on our back, live life to the fullest according to your income. But your second objective is not easily met. Now, Deja, how are we going to support our future lifestyle?
Comes from investment.
See, our future lifestyle needs to come from investment. See, so while we're working, we need to take some of that labor income and we need to put aside for investment. See, if you want to stop working someday, you have to have enough money set aside so you can completely stop working. Because here's the question: how are you going to maintain a lifestyle if you have no labor? Now, I can promise you, one of three things is going to happen. Either you get too old to work, or either whoever you're working for no longer needs your service, or you just get tired of coming in. But when you stop working, you need to have something to still bring in income so you can still live your current lifestyle. So investments is the only way to go. So if you're living a $50,000 lifestyle, Deja, you need to have at least 10 times that amount stored in investments. For instance, if I wanted a $50,000 lifestyle, I need to have $500,000.
Right.
Growing at a rate of return of at least 10%, okay? So if I took 10% of 500,000, that'll give me my 50,000. Now, Deja, you look like the type of person that want to ball out with 100,000, right?
Sure do.
That means you gotta have at least $1 million set aside in investment, growing at a rate of return of 10%, okay? And you take 10% of a million, you have your 100,000, okay? So, when I talk to people and I ask them about what are their plans, normally they're talking about the government and corporate America using them as a backup. Now, the government, they had this thing called pension, okay? Now, that's when you used to work 40 hours a week for 40 hours a day for 40 hours a week and hope and pray to live off of 40% of the income. That was pension, but pension is no longer working. And so Social Security, right? Okay, Social Security is no longer working because if you know anybody that's on Social Security, you know it's not enough money for them to live off of. And it's not even guaranteed, Deja, by the time it's your turn to draw Social Security, that there may even be anything in the pot, okay? So, pension and Social Security is no longer working, okay? Now, everybody can be wealthy once you understand the 4 challenges that are stopping you from becoming wealthy, okay? So if you're taking notes, I want you to write number 4 for the 4 challenges that are stopping you from becoming wealthy. Now, Deja, can you tell me what the first challenge is?
Inflation.
Inflation, okay? Now, inflation is the cost of goods and services going up, but your paycheck stays the same. Now, here's an example. Think back in the past when $20 used to fill up your gas tank. Now, that was probably before you were born, okay? And now $20 barely gives you a half a tank, okay? You know what I'm feeling. You know, you ride and get gas, it's $2 one day, and the next day is $2.30. Okay, well, that's inflation. And when that happens, everything goes up. So here's what I mean. When you go to the grocery store to buy them grapes and the gas prices is high, well, the guy that's out there farming for you have to put more fuel in his tractor, so he's hit with inflation. But do you think he's gonna keep inflation? No, he passes it on to the trucking company. Now, do you think the trucking company is gonna keep inflation? No, they pass it on to the grocery stores. Do you think they're gonna keep inflation? No, they pass it on to you. And then you wonder why grapes are $6 a pound, okay? All right, so inflation, we like to call it the silent income killer because it's steady going up, but your paycheck is flatlining, okay? Now, Deja, what's our second challenge?
Taxes.
Taxes. Now, how much are we hit with taxes?
1/3.
Okay, so the government is taking 1/3 of your income right off the top. So what that means is you're working for the government 1/3 of the year. So from January to April, just think about you working for free, and then after that, you can have all your money. You probably wouldn't stand for it, so the government takes a portion of it every single month. But I guarantee you, at the end of the year, when you add up all your taxes, it's probably 1/3 of your income, okay? So, the third challenge is
Debt.
debt. Now, debt has become acceptable in America, okay? So, if you want a home, you can't buy it because you don't have the money because you're forced with inflation and taxes, so you go out and get a home loan. You want a car, you go get a car loan. You want education, you go out and get student loans. But the thing with debt is it comes with a penalty. See, debt is a penalty that we all must pay to own something today that we cannot afford. Oh, Deja, that sounds good. I'm gonna say that again. All right, you listening? Okay, here it is. Debt is a penalty that we pay to own something today that we cannot afford. Okay, now I want you to think about this too. See, debt and taxes, they go together. Now this is something I want you to think about. What's the 2 largest entities in the world with the largest bank account? I'm gonna tell you, it's the US Treasury and the Federal Reserve. Now, who puts the money into that account? We do when we pay our taxes and when we go into debt. Okay, so debt is a curse. And we're going to show you how to eliminate that curse. Now, Deja, debt takes another 1/3, right? It takes another 1/3 of your income. So we got 1/3 left, and that's gobbled up by
Big businesses.
Big businesses, okay? Now, big business is called big business for a reason because big business takes your wants and they turn them into your needs, or let they make you feel like it's your needs, right? You just gotta have it. You know, they came out with the flat screen TV, now they got the curved TV. You got the iPad mini, then you got the regular iPad, and this girl here, you know, she had the iPhone 6, then the iPhone 7, iPhone 8,
You
now I
keep
think
going
there's
up.
a 10.
Oh, okay. I thought you was gonna say 9. Said it ain't no 9.
Okay, ain't no 9. Well, the iPhone 10, X or whatever it is, okay? So, big business have a way to tapping into your emotions. See, here in corporate America, big business is a big business, okay? So, have you ever wondered why there's a holiday every single month that big business wants you to celebrate? See, we're in July right now, and we just finished celebrating Independence Day. And August is just right around the corner. Now, you're probably saying there's no holiday in August, but kids go back to school. And that's when all the stores have the tax-free weekend, right? So you're going to go out there and start spending your money because it's tax-free, okay? And then after August, we have September. That's Labor Day. That's when the hard-working men and women celebrate working, okay? And they normally get the day off. But corporate America knows you off, so they throw all these Labor Day sales because if you're not working, you might as well be shopping, right? Okay, so what comes after September?
October.
October. And what holiday we have in October?
Halloween.
Halloween. Never really understood the purpose of Halloween, but it's a $1 billion industry where some companies are only open for a few weeks and they make enough money to last them the whole year. And then after October, what we doing? November, that's Thanksgiving. And a couple of years ago, I don't know if you realize, but they started this thing called Brown Thursday. That's when you can go shopping on Thursday before Black Friday. And then on Saturday, we got Small Business Saturday. And if you can't get out the house, we have Cyber Monday. Okay, so capitalism is just hitting you. And then after November, December. What holiday? Christmas. And that's when you're going to start buying gifts for people you don't even like, right? You got to participate in the company's Christmas party unless they'll start calling you a Scrooge or something, right? So everybody has to get gifts. And then we got January. We celebrating New Year's, right? Got to have that nice dress. We start popping fireworks. Now, this is popping fireworks. I think that's so silly because that's just really taking money and blowing it up in the sky. And then we have February, which is Valentine's Day, and you know you gotta celebrate your loved one. Deja, if your boyfriend didn't give you anything for Valentine's Day, would you be upset?
I would be upset. I'd be so mad at him. We wouldn't talk till next Valentine's Day.
See, we don't want that, right? Your grandma the same way. Okay? All right, so we got to celebrate our loved ones. And then after Valentine's Day is March. And that's when spring break starts. And here in Georgia, we celebrate St. Patrick's Day. Okay? We even turn a river green. Okay? It's just crazy. And then in April, we have Easter. And in May, we celebrate Mother's Day. In June,
Father's Day.
All right, don't forget about the fathers.
You can't forget about my birthday and my prom and my graduation, and we probably could do your birthday. Probably. But it's all about me this year.
See, I ain't even got there yet. Right? Where we at? We in
July.
And we back to July. Okay. All right. Okay, so we're gonna show you how to make better cash flow decision when it comes to big business. Now, I know this probably has been a negative presentation so far, but we have the solution for you. So if you're taking notes, I want you to write down the number 3, and next to 3, I want you to write solution because we have a solution, don't we, Deja?
Yep.
And our solution is cash, asset, cash. See, that's the formula to wealth. Cash, asset, cash, if you didn't know. We want to take some of that labor income, that cash, and we want to build, grow, or buy an asset that's going to make more cash. Now, we have 3 smart cash flow strategies. We call it the 369, okay? And what that means is within 3 days, we want to show you how to bring more cash flow back into your home, okay? And the way we do that is through what?
Cash flow management.
Cash flow management, okay? Which is very important. Now let me talk to you about cash flow because a lot of people don't really understand cash flow and income. There's a big difference. See, cash flow is measured in time and income is measured in dollars, okay? So what I mean by that, it's not about how much money you make. It's about how much money you keep. See, I can make $1 million, but if my expense is $2 million, then my cash flow is only gonna last me 6 months, and then I'm out of money. And you can make $80,000 a year, but if your expenses is $40,000, then your cash flow lasts you 2 years. So it's not about the money you make, it's all about the money you keep. Okay? All right. So, and the way we do that, if you have a W-2, you got to understand a W-2, and there's nothing wrong with a W-2, but you got to understand the philosophy of a W-2. So, Deja, what's the philosophy of a W-2? First of all, W-2 is taxed the most, right?
Right.
And they're taxed, I saw you write it down.
Yeah, they're taxed at 28 through 33%.
28 to 33%. Now, Deja, tell them what's the philosophy of a W-2.
Well, I work, I'm taxed, and I spend.
Okay, so the philosophy of a W-2 is you work, you taxed, and then you spend your money. And this is why most Americans live paycheck to paycheck, because they don't have enough money, okay? Because they work, made all the money, then the government takes a third, then they gotta pay their bills, right? They the last in line, so, you know, there's no money left. So the thing that we want to do is help you, and Deja ahead of me, we want to help you minimize your taxes. Now, how do we minimize your taxes? We want to help you correct a form that most Americans get wrong. Over 80% of Americans fill out the W-4 incorrectly. And the reason why I know that is because the IRS had reported that 80% of Americans receive a refund of at least $3,200. Now, you're probably saying, Charles, what's wrong with that? Well, first of all, let's look at refund. Re means again, fund means money. You're getting your money back again, okay? But your money is not worth the same when you get it back as when you made it, okay? Because by the time you get it back, inflation done already tapped into it, okay? So, and then here's the thing. In some states, when you get your refund, you're taxed again because the government consider it as income. So let me explain this to you. You overpay your taxes, you get some of your money back, and then the government tax you again because they consider it income. All right, that don't even sound fair. Does that sound fair?
It don't sound fair to me.
That don't even sound fair. So we want you to take back your tax dollars and use them to either eliminate debt or invest. See, most people don't have enough money to invest. Well, there it is, okay? You can take that money and invest. Now, the next thing we want you to do, we want you to minimize what?
Debt.
We want you to minimize that debt. And the way you minimize that debt is to take those tax dollars and then apply them to your debt and cut out all that compound interest. See, cut all that compound interest out. And then the last thing we want you to do, just do some cutbacks, okay? If you like Starbucks coffee and you're drinking that 5 days a week, we asking you to do it maybe 2 days a week. Now, my wife, your grandmother, she's got this thing with movies on the weekend, these red box movies, and she gets like 5 of them, and then we don't watch them, and then we end up not turning them in the next day, and we keep them for a few days. You know, we're working on her though, and we're going to minimize some of those expenses. Okay, so that's our first strategy, is cash flow management. Now, our second strategy is
A business income.
Business income, okay? Business income. Now, business income, we want you to earn your money with what they call a 1099, okay? And within 6 weeks, we want to show you how to earn money with a 1099. And the reason why the 1099 is better is because they're taxed different. How are they taxed?
Or they're taxed 18 to 23%.
Okay, 18 to 23%. Now that's a whole lot better than 28 to 33%. Okay, now actually they tax the same, but the net effect of having a business lowers it. Okay, and I'll explain a little bit later. So the philosophy of a business owner is what?
Business work, Business spends, business tax.
So, okay, man, she's doing great, right? So, with having a business, you get to work first, spend your money second, and then you're taxed at the end. That's a whole lot better than being taxed up front, right? We get to spend our own money, and then we're taxed at the end, okay? So, now, if you would just invest $35 one time, and then $35 a month, you'll be able to
Write off your lifestyle.
write off your lifestyle. Now, what does that mean, write off the lifestyle? We want you to take tax deductions and write off things that you do anyway, like getting your hair done and those nails done and buying them clothes, okay? Paying for that cell phone, that iPhone 10, okay? When you driving around, the government gives you 54.5 cents a mile. Now, this is my granddaughter Deja, and she actually has her own business. She's a photographer. Go ahead on and tell them what you do.
I take family pictures, and I don't charge as much as other people because I'm not licensed, but I don't really write off my stuff like I'm supposed to.
But she's an entrepreneur, though. Okay, so we are putting the entrepreneur spirit in. But what Deja don't realize is that she works for me. So see, part of writing off your lifestyle is you can hire your children. Okay, you can hire your children to work for you in your business. Now, this year in 2018, the government is allowing you to take a tax deduction up to $12,000 per child. And see, Deja is how old?
17.
17. Man, time is flying. So, Deja, as you see, she's my assistant. She set up classrooms for me. She passes out flyers. She wears t-shirts. She shreds paper, wash company cars, clean the company office. She got a list of duties and responsibilities that we put on her. So every month I pay Deja a salary, okay, or wages, okay? And we're telling you to stop paying your kids allowance and give them wages, because wages are tax deductible. So I put the money into her account, and then when she wants to go to the movie, we take the money out the account, send her to the movies. When she want to buy that car, we'll take that money out the account and go buy that car. When school starts, we go take the money out the account and buy school clothes. When she wants to get into sporting events, we take the money out the account and pay for the event. So here's what I mean. All that money that went in the account is all tax deductible, regardless of what we do with it once we take it out, okay? So you get to write off your lifestyle. Now, you also can earn what we call residual income if you would share this information with someone else. Because if you don't have a business, we have one for you. It's called My Econ. And your business is to share this information with as many people that you can. We're out here to try to help as many people as we can. And if you do so, you can earn up to $3, $5, and $8, depending on how many people you help. So just think about it. If you help 100 people at $3, that's $300, okay? Positive cash flow. If you help 200 people at $5, that's $1,000, okay? What about sharing it with 1,000 people? And you ain't got to do it by yourself. At $8, that's $8,000. That's some good money, right? Okay, all right. So that's our second strategy. Now, our third strategy is
Investment income.
investment income. Now, see, this is where we have money making money, okay? This is the best form of income. And people that invest are taxed what?
Less than 15%.
They're taxed less than 15%. And there's a reason behind that. And once you got to understand the reasoning, because investors get a tax break because they invest in businesses. Businesses get a tax break because they hire employees, okay? So the government not crazy, right? There's a system to the madness. So, again, if you're an investor, they make their money with money. So their money work, then they reinvest their money to make more money, okay? Now, and how do they make their money?
By capital gains.
By capital gains, okay? And what else?
Dividends.
And dividends. Okay, so when you start investing in company and when you start owning a piece of America, when that company does well, you get paid. So I would tell you to own a piece of America. So Deja is always on Facebook, so she got stock in Facebook, right? Okay, if you like Jordans, then put some stock in Jordans, okay? If you like Apple products, put some stocks in Apple products, okay? And when those companies do well, you get paid, okay? But the best investment you can make is
Yourself.
in yourself, okay? So if you're willing to invest at least $35 in yourself, I will personally coach, train, and mentor you so you can gain financial success. So we were talking about the Evans family, right?
Right.
But you know another show I used to like? It was the Jeffersons, all right? I'm pretty sure y'all remember the Jeffersons. To the deluxe apartments. We finally got a piece of the pie. Here we go. Sing with me.
Fish don't fry the chicken.
Beans don't burn on the grill. Took a whole lot of trying just to get up that hill. Now we up in the big leagues. It's my turn at bat. Long as we here, it's you and me, baby. There ain't nothing wrong with that. Okay, all right.
You done?
I'm done.
Okay.
I'm done. All right. We're done. Okay, so please share this video. If there's anybody that you know that needs financial education or a breakthrough or need to make additional income and just really want to get over the hump, hey, y'all share this video and have them to get in touch with myself or Deja or anyone that shared this video with you, because the person that shared this video with you most likely can help you. Okay, so this is your boy Charles Ivory. You don't know what you don't know, but we can all learn and grow. I'll see you at the top of success.
Bye.